All right, now what are the top stock picks for this week that these gentlemen have brought with them? Shiraz Mian, we start with you.
Wyndham Worldwide, a major player in the leisure and the hospitality industry. They are the biggest player in the timeshare business. About 50% of their revenue comes from that. About another 1/3 of the total comes from these vacation rentals and vacation exchanges, and about 15 to 17% from the lodging business. More than 2/3 of the cash flow is basically fee for service.
Okay.
Very stable, very visible, very low risk. And the reason why I like Wyndham Worldwide so much is that it's a huge cash flow story.
Almost like a REIT rather than a hotel business.
It is.
Yeah.
The dividend is about 1.5% yielding right now, but they would be generating from 600 to 700 million in free cash flow this year. Also in 2013, in fact, the outlook is that over the next 5 years, they should generate anywhere between $3 to $4 billion in free cash flow, pretty much all of which will flow back to shareholders in the shape of dividends and buybacks. Now, $3 to $4 billion in free cash flow on a company which is about $6 to $7 billion in market cap is a huge value out there. I really like it. I think it's safe and steady play in this environment.
Okay, we got to move now. Do you guys agree? Oh no, wait, that's a different segment. Kevin Cook.
Oilfield services named C&J Energy Services. They're located, they do business in Texas, Oklahoma, and Louisiana.
Okay.
You can see from the chart, relatively young stock, just IPO'd last summer. They're going to earn $4 a share this year. How is their business so strong in such a young company? Well, obviously they had a lot of existing business. They serve Apache, Anadarko, Chesapeake, a lot of the big boys in drilling. And boy, this stock was a screaming buy 2 weeks ago below $17, and I just missed it. We were talking about that earlier,
right.
Waiting for stocks to come back to you, and they don't. This one, I'd be a buyer, say 2021, looking for a breakout here above 22.50. With $4 EPS for this year, it's trading at 6 times earnings. So
Okay.
Pretty good.
Mr. Matrix.
I like both of those spaces for the record.
I'm glad. Thank you.
Mine is Interline Brands, ticker IBI, and they are in the building and construction industry, and they sell a wide array of products to the MRO segment, which is maintenance, repair, and operations. So I really think they're in a really good space, and that is what attracted me in the first place. Also, too, I think their fundamentals look excellent. They have a 7 to 10% projected growth rate for each of the next 2 years out. They are in an industry which is rated within the top 20% of industries. They have a Zacks rank of a number 1, which is even better, and their valuations all look fantastic. The thing that's very interesting for me is that there was a lot of institutional buying in the last couple of weeks. And the reason why this is exciting is because the price has responded accordingly, and the institutions are piling in ahead of their earnings report. They're going to be reporting on Friday. So I can understand why the institutions are excited, because the last time out, they posted a 5.5% positive EPS surprise and a 1.5% positive sales surprise. Looking at their price target, I have a short-term price target of $23. That is an 18% price increase from here. My longer-term 12-month price target is $28. That represents a potential 44% increase. My bet is they do it.
All right, we got to run. Thank you all for that. Don't forget, you can get the latest thinking and insight from each of these gentlemen on our homepage, Zacks.com, when they contribute to Zacks Real-Time Insight on different issues and trends affecting the market and the economy. You can even interact with them. Zacks Real-Time Insight. Check it out, Zacks.com. With everyone here, I'm Terry Ruffalo.